So if you collectively lump all the Bitcoin ETFs together, and I guess do the same thing for silver, I assume there's more than one. It is now the second biggest commodity ETF out there, second to gold.
So it goes gold, Bitcoin, silver.
Yes. And that was the 18th. So that was a week later, or just over a week later. Pretty quick.
That's very quick.
And I remember texting you. I was like, I don't know if that like is a compliment to Bitcoin or like how bad is silver going? Like
silver has an industrial purpose though.
So does gold.
Well, I guess
it's in all of the technology that's sitting on this table right here.
Yeah, that's true. Welcome to a Wiser Retirement Podcast. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today is my co-host, Robert Swarthout, founder, CEO, portfolio manager at Teton Crypto Capital. Hey, Robert.
Hey, how's it going?
Doing good. Welcome to the 206th episode of a Wiser Retirement Podcast.
It's a lot.
It is a lot. It feels like we just started doing this yesterday. You're a regular. Thanks for coming on.
Yeah, I enjoy it.
Today is a crypto edition of a Wiser Retirement, and we have a lot to talk about. Finally got a Bitcoin launch.
Bitcoin ETF launch.
Yes.
Yeah. Spot ETF. Yeah. You know, it was a lot of buildup for this one. In some ways, years, almost a decade in the making since the Winklevoss twins first applied for one. Probably a little bit early back then. But here we are.
They didn't reapply. They're not on the list.
Yeah, I don't know when they decided to stop taking a swing at it, but
I don't hear much from them anymore.
No, well, considering how much Bitcoin they hold, they don't really need to do much. So
they're living their best life.
Yeah. Yes. Yeah. Thanks to Mark. So, but yeah, so we had the launch. It happened on January the 10th.
But first, we had the fake launch.
Yes. What a just disaster. So the day before, that would have been January the 9th. I think it was around lunchtime, Eastern time. There was a tweet sent out from the SEC's Twitter account saying
X.
Yeah, sorry, X. It's always gonna be Twitter to me. And it said, oh, we're happy to basically, I'm gonna get this paraphrasing wrong, but we're launching we're approving the Bitcoin ETFs. Blah, blah, blah. I had a picture of Gary on there, like nice little image, seemed real. And within like 30 minutes, Gary tweeted from his personal account saying, no, this was not us. So effectively, the SEC's account was hacked and somebody, sent the tweet out.
But then the very next day.
So that was lunchtime on the 9th. By, I think it was around 4 p.m. or 4:30. Actually, I remember I was like, I rarely watch CNBC. I was like, I'm going to turn it on and kind of watch the TV and kind of see what happens as this gets announced. So it was 4:30. They were interviewing the founder of VanEck, and it was approved for real this time. And, then on the 11th, in that morning, it started trading. So lots of drama, in crypto, it's kind of par for the course. I don't think that Wall Street was ready for the crypto drama of an ETF launch in this way, but it was entertaining nonetheless.
So what are the repercussions of hacking the SEC's X account? I wonder.
You would think, well, if I remember correctly, the DOJ is now involved doing an investigation. Okay. Like somebody probably leveraged long somewhere, sent out the tweet, and then knew that it wasn't going to last long and sold. So there was some money to be made. Bitcoin, I think, popped like 10, 12%, something like that on the news. So, with some leverage on a 10%, real move, you can make some money. It's kind of a sad state of affairs because the SEC did not have two-factor authentication turned on for their account.
Really?
And they claim it was a SIM attack. So like somebody's phone number that was attached to that account got attacked, so they were able to get in. The rate the speed at which they were able to recover this account, like less than an hour later, they had a control. This blows my mind. Like Twitter, or X, doesn't really like tend to help other people that quickly. So I don't know if I buy the whole story.
Yeah.
And honestly, it's coming from
and the SEC
against our SEC, so I don't believe anything.
And Musk are
right.
Or
they're not exactly buddies. Yeah.
So I think Musk has won every fight. So.
Yes. And kind of a bit of a funny anecdote here is before the SEC said what happened to their account. They said, "Oh, we've recovered it." By the next morning, so the morning of January the 10th, before they had officially launched or said the news of the ETF, Twitter comes out with their postmortem saying, "This is what happened to the account."
Oh,
they just laid it
geez.
out. They're like, Twitter was not hacked. This was a third-party issue. Yeah.
Okay.
The poop is on your face.
My initial take on that, before you told me, texted me, I think, said, "Hey, they launched this," and then it was fake. My thought was, well, maybe they're testing the market. They're testing the waters. Yeah, we're going to launch it. What happens when we do this? It's like sticking your head out of the foxhole going, okay, what's going to happen, with your, helmet on a stick.
Yeah. Part of me wondered within that roughly 45 minutes after we realized it was a fake news event, I was like, who's the motivation here? And like Gary's,
but everybody went for it.
Yeah.
It was the headlines on CNBC.
Right. Because everybody was waiting
terminal
to press publish on their news articles. Right.
Right.
And
true.
because everyone knew that the window is the 5th through the 10th for approval, like it was a perfect setup for manipulation event. So when the fake news came out, like my original thought was, okay, once we realized it was fake, that this is Gary one more time yanking around the crypto industry because he seems to get his jollies off that.
Right.
So I don't know. We'll find. Well, we may never find out who did it, but at this point, it's something to laugh about. So,
well, even if obviously hacking's really bad, but if they made money off of it, only the hacking would get them in trouble, not the market manipulation, because that's not illegal
in crypto. Correct.
In crypto.
So they probably get them on wire fraud.
Right.
or something like that.
It'd be like all the gangsters a long time ago, right? You get them on everything but being a gangster, essentially.
Yeah.
Right?
And my guess is it was someone that wasn't in the US. It was so like, good luck prosecuting.
Oh, for sure.
Yeah.
Oh, yeah, absolutely.
Yeah. So,
well, all right. So we finally get the real ETFs launched the next day. There were 11 of them. There's been one victim already.
Yes.
VanEck Bitcoin Trust did not make it.
Yeah,
within 2 weeks?
Not even 2 weeks. I think it was delisting. So that was on the 17th. So yes, 1 week later, they announced obviously they just didn't see the inflows that they thought.
Yeah,
and they did a lot of work for nothing. Like
I was wondering how much money was lost on that,
and I just find it ironic. The first one to bow out was the one that was on CNBC when it got announced, and he was like literally they were interviewing the founder. What's his name? The last name is VanEck, is all I remember.
Yeah.
And it was just kind of, I guess, coincidental, but it's just interesting timing.
When you got automatically, you have iShares, you have the Bitwise, and you have Fidelity in your space already, and no one's ever heard of VanEck. No household
outside of the crypto space. Yeah.
Right. Same way for WisdomTree. WisdomTree has some great products, but they've never really had enough traction to have even tight spreads on most of their ETFs.
So one thing, maybe you know the answer to this. So VanEck is bowing out, or they already have bowed out. I don't know when their timeline is, but so the ticker that they had chosen for theirs was HODL, HODL, which is a rather crypto famous acronym. It's supposed to mean hold, but somebody mistyped it years ago, and now it's become a meme, right? Kind of like diamond hands and the whole HODL thing.
Yeah.
So is that ticker up for grabs for someone else, or like
I don't know. It's probably a lot like
like a copyright. They can kind of hold on to it.
Well, no, I don't think it's copyrighted, but I would think that it's like retiring your Gmail email or something, and it sits out there for a while, closed before anybody else can access it.
Yeah, because I guess there's statements it's going to show up on, so it's not like it can.
Yeah, I wouldn't think it'd be available for a very long time.
Yeah. But yeah, some of these other tickers I find entertaining. So Hashdex went with DeFi, DEFI. Valkyrie went with Burr, BRRRR.
Is that talking about the crypto winter? What is that?
I thought it was a play on the whole money printer Burr thing. The meme with Powell and the money being shot out of a typewriter. And then you had the HODL. The rest of them are kind of a
just
bit
normal stuff.
Yeah, kind of.
I did a quick little video on this. We can link to it in the show notes. How to choose a Bitcoin ETF.
Does it involve a
and-
dartboard?
Well, no, I think you choose it. You choose your Bitcoin ETF the same way that you'd choose any other ETF, where you focus on price. You focus on
Fees.
the fee of the fund. You focus next on volume. So these ETFs are going to have bid ask spreads just like any other ETF, and so that's your second level of fees. Your first fee is your management fee,
Right.
which ranges anywhere from looks like 0.2 to all the way up to 1.5%.
Right.
So, but on the bid ask spread, so we were monitoring that, the day they launched, and it ranged anywhere from 4 cents to 40 cents.
And to be clear, the price that you're seeing is not the Bitcoin price, because it's shares in a thing. So it's like a much smaller number than the Bitcoin price would be.
Correct. So your bid and ask is what you buy and sell it for. So that spread goes to the market maker, right?
Right.
So if it's a really tight spread, then that's a much more efficient trade. If you want to get really into it, there's the price of Bitcoin, then there's the representative price of the ETF. So that's your net asset value versus your value of the ETF.
Right.
Those should be very close, and market makers will arbitrage that and make money themselves, or funds will. Large funds can hedge that gap. But you want to anyway. You want that to be a tight spread. So your BlackRock's, your even Bitwise, also the Fidelity one, those are going to have pretty tight spreads because they have pretty good volume, where your other lesser known name brands are going to have very wide spread.
Yeah.
And the next one is just asset size. So I don't have the asset size as of today, but on the open, it was very clear that Bitwise, BlackRock, and Fidelity were going to be the three largest. And now I think Bitwise has even fallen to fourth now.
Yeah, because the ARK one is kind of...
ARK one's picked up with Kathy and her brand being very popular and having a strong following there. But yeah, so it's the reason why you want to have at least 100 million is below 100 million. The rule of thumb is that this is really not as profitable for the company, and therefore they're going to shut it down. So in the ETF world, I can't think of any messy shutdown. There's been a lot of ETFs that have shut down, but you have this market that's able to come in, and you end up getting cash for what it's worth. It's a very organized shutdown process, but you really don't want to be caught up in that if you don't want to have to be.
Because you got a taxable event if it's going to cash.
Well, yeah, you're headed to cash no matter what, right?
Yeah.
So you want to make sure that you have a reputable company. That would be the fourth one. Just their size of the fund, but then also like who you working with. You're working with a BlackRock, Fidelity, a Bitwise, even a Wisdom Tree. You have a name brand company, where if you go to Franklin Bitcoin, Hashdex Bitcoin, you're paying a lot more. And no one ever really conducts business with these companies.
Right.
Yeah.
What's interesting is you're talking about the fees, and those are either right now or after 6 months, because some of them have been doing no
free
fees up to a certain AUM, or free for 6 months.
So your ARK, Bitwise, Wisdom Tree, Invesco, Fidelity, Valkyrie, they're all offering no fee for the first 6 months of, not when you purchase it, but the first 6 months of their issue date.
Right. Yeah. What's been interesting to kind of watch, I don't think we talked about it in our last podcast, but the fee war that happened leading up to the launch of this. Because I think then when they first started publishing their fees late December, they were somewhere around 40 basis points, the lowest. And then they kind of like worked their way down to, I think the lowest is at 0.2, but like, it's pretty fascinating to kind of see the positioning there. Yeah.
Your cheapest is still Bitwise at 0.2%, but you've got ARK, which is at 0.21, which is probably why they're gaining shares, because it's free right now.
Yeah.
And it'll go to 0.21. Even iShares is not offering free. They're offering 0.12 and it'll go to 0.25.
Yeah.
But you just have that brand recognition of BlackRock and the iShares brand.
Yeah.
So.
And I would say, I'm probably going to be a little bit biased here, but the Bitwise one I have found the most fascinating. They're the only pure crypto player that has launched one, and they've done a masterclass, in my opinion, of how to market an ETF relative to these others.
Oh yeah.
Because the amount of inflows that they've had relative to the brand size of them has been impressive.
You've got Matt Hogan running Bitwise. Yes. Matt knows what he's doing.
Yeah.
So
and they've had some great commercials. And,
they have great commercials. Matt was one of the pioneers in analyzing the ETFs when they were first launched back in 2002, 3, and 4.
Mm-hmm.
Our friend Don Friedman was a part of that movement as well.
Yeah.
And so they hats off to them because they've done a great job. I think he probably doesn't think this, but I think he was just very early in that space for a lot of people to follow.
Right.
And then have to last that horrible year and a half where everything was falling, right?
Yeah. Oh, yeah. Welcome to crypto.
But they kept it together, and they seem to have made a good product. So kudos to them.
Yeah.
But yeah, I it's been fun to watch, and I will say that it has a flashback to like 4, 5, 6, 7, 8 when they were new ETFs are launching every
2004,
day.
5, 6, 7. Yeah.
Correct. And I had me and my trusty sidekick, Kyle Waller, also Barry grad.
Okay.
I think he was class of 08, hired as an intern. There was no jobs.
Yeah.
I said, well, since you can't find a job, just stay with me.
Yeah.
And we had a great time analyzing ETFs, speaking all over the world, talking about ETFs that were launching, ETFs versus ETNs. Anyway, it was a really good time in our young company's history. And I remember just being so excited when, oh no, these real estate funds are going to launch. Like I remember, oh no, there's small cap funds coming out.
Yeah. Oh yeah. We don't have it in our notes here, but like now all the speculation and anticipation has turned to an Ethereum ETF.
That's right.
When that might happen. Some people think as soon as 3 to 4 months. I don't think there's a chance that happens that soon.
Right.
Because the SEC cannot clearly state that Ethereum is not a security.
Well, why can't they? Because the lawsuit, they lost the lawsuit.
Well, not about Ethereum. They lost the XRP lawsuit.
Oh, that's right.
So in some ways, I think there's a higher chance that XRP happens, but Ethereum is just so much bigger. It seems like the next natural one from a market cap standpoint, but it's...
Would that conflict with some of their current legal proceedings?
Well, I mean, again, the SEC's eyes, even though they've lost the lawsuit in the Ripple case, they still believe that all crypto is a security outside of Bitcoin. Like they have never publicly said, because they're still in the whole like, they hadn't had a chance to appeal the XRP ruling.
And Bitcoin, because of this, its origin of some person creating it. Yeah. There's no entity you can go after.
Yeah. I mean, that's really what it comes down to for them.
Which is crazy.
Yeah. But
who is that person again?
Satoshi Nakamoto.
That's right.
He, them,
supposedly.
She, I don't know.
We don't know.
We don't know. If you listen to Jamie Dimon, he thinks this person's going to show up and just create more Bitcoin. I saw that Davos interview and I'm like, dude, man, you're a smart dude. And that
wait a minute. I missed that part. Say that.
Okay,
say that again.
So he was on CNBC for 10 minutes. He could talk about whatever he wanted.
Yeah. He talked about Trump for a while.
He talked about Trump and he talked about Bitcoin for like 5 minutes.
Okay.
And like rambled. And then as part of that, he goes, how do we know that there just can't be more Bitcoin? And like one of the other interviewers was like, well, the code says so.
Right.
And he's like, well, why can't Satoshi just like show up and create more Bitcoin? Like it shows such a fundamental, either he's like being disingenuous and he knows the answer.
Yeah.
And I'm guessing that's what's going on. But like you would have to get 51% of the network to agree to change the code that allows, and Bitcoin people are like hardcore that they have a limited supply.
Right.
Like it is no chance that's happening.
Yeah.
So it's just kind of like, man, like of all the things you could have said, you chose to say that. So yeah,
he was on a roll. I only saw the portion where he talked about Trump being the next president, and
yeah, it was in the same segment.
He had good policies, but he was just a crazy dude. So
yeah,
but yeah, interesting. Jamie Dimon, unhinged.
Yeah, well, if anything, he's being consistent about Bitcoin. He also said this was the last time he's ever going to talk about it. So hopefully he sticks to his word, because I'm tired of hearing him talk about negative Bitcoin.
But his company has a huge investment in.
He's a sponsor, a participant in these ETFs. Like,
right.
I don't know. Watch what they do, not what they say. Is I guess the moral of the story there.
Well.
So.
the train's left the station.
Yes.
At this point, there's no pulling it back. I mean, sure, you could have mass sell-offs, I guess, but you could have that in large cap stocks. So
Right.
Are you curious why annuities keep coming up as a potential investment option? People are often told that annuities can effectively mitigate investment risks and help secure their financial future. However, annuities often benefit the salesperson and might not be the best choice for you as a consumer. To learn more about the various types of annuities, the negatives of owning them, and better investment alternatives, we have a free ebook on our website just for you. To download our ebook, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity? Simply click the link in the episode notes or visit wiserinvestor.com/guides. Now let's get back to the episode.
let's talk about Bitcoin being larger in market share than
Silver. So Bitcoin
Silver.
is a commodity. I think that's everyone is they're
everybody
understanding there.
agrees. Yes.
Yep. So if you collectively lump all the Bitcoin ETFs together, and I guess do the same thing for silver, I assume there's more than one. It is now the second biggest commodity ETF out there, second to gold.
So it goes gold, Bitcoin, silver.
Yes. And that was the 18th. So that was a week later, or just over a week later. Pretty quick.
That's very cool.
And I remember texting you. I was like, I don't know if that like is a compliment to Bitcoin or like
How bad
is silver going? Like
silver has an industrial purpose though.
so does gold.
Well, I guess
It's in all of the technology that's sitting on this table right here.
yeah, that's true.
Small amounts. Yeah.
Yeah. Well, I don't know. I'm shaking my head for all the people over 70 years old who are still like, what am I investing in?
Well, there was technology that came along that they understood that their previous generation didn't either.
Yeah,
It's
that's true.
part of the cycle. It just happens quicker, and I think it's more magnified these days. So
it's very interesting. So I have a group that I have breakfast with once a month, and he was one of the guys in the group was talking about, okay, if Bitcoin in price actually goes to 1 million, and you look at all the dollars and what the dollars are worth around the world,
okay,
you'd actually surpass Bitcoin. Would have a higher market value than
the M2 money supply
than any currency. Yeah,
Oh.
if it goes to $1 million or 1.5, kind of what Ark was talking about.
Yeah. Well, I don't know. I've never like researched that exact scenario, but the first thing that comes to mind is how much more devalued is the dollar between now and Bitcoin going to $1 million.
Yeah,
the rate that the government's printing it
So
can function be today's dollars.
But what does that mean? What does that translate to? What does that world look like?
I think what you may hear as an argument there is Bitcoin being limited in supply or finite, right? 21 million ever. And governments being willing to inflate, it's a bit of a flight to safety. So it's almost like a gold that you can like put in your pocket and walk away with. Gold's hard to transport, hard to custody.
Yeah.
Somebody can come and take it from you. It's a little, I mean, obviously people can steal your Bitcoin, but it's a little easier to hide.
You can't transact in gold. You can barely transact in Bitcoin.
Correct.
There's a whole lot.
Yeah, right. I mean, it's almost a novelty when you can. It's not a real thing.
Yeah.
So
is it more liquid than gold?
It depends on who you're transacting with.
Yeah.
I mean, like it's a generational thing. Like the 70-year-old's going to want the brick of gold.
That's true.
So,
so all the gold, all the precious collecting stores. What do you call them? Coin stores.
Of course, yeah.
They're in 30 years they'll be gone. It's just going to be Coinbase.
Right. Well, right.
Or something similar.
Or something similar. I mean, it's one man's trash is another man's treasure.
Right.
So
exactly. Hey, you know what? I've had this happen in my own family, but also in clients that we talk with. All this gold coins you buy on TV or you buy them from dealers. Okay, these people, you buy all these stuff, these collectors, they pass away. And usually like the spouses are like, I don't know how you bought all this stuff. This is ridiculous. I want to get this out of my house. So they go to sell it. 20 to 30 year holding period. They're selling them for less than what they bought them for. That's the reality, because the
Right, yeah.
spread on gold is huge,
Yes.
huge.
Yes. And it, I'm not one that buys gold, but like I often wonder, is it always like the prepper doomsday people that are buying gold? Or like who buys gold these days?
I don't know.
Like
Fear
physical
people,
gold.
the people that are fearful, I think is what
Yeah.
it comes down to. Now you still might say, hey, I'm going to take $20,000. I'm going to buy some gold.
Sure.
I don't think there's anything wrong with that.
Right. But it can't be a core
No,
position.
no, I just don't think you make money at it. I think it's a hobby. That's
Right.
what I think.
Yeah. Yeah. So people will like buy guns.
Now there are periods where like we don't track the price of gold in someone's safe, but we track the price of the gold ETF, and there are certainly periods where it does well. But I just don't think that we're in a world, or going to be in a world, where gold is going to be worth anything.
We hope not to be
Or
in the world.
gain, I should say. It'll always be worth something, but it's not going to have substantial gains.
Yeah.
If you want to hedge the world falling apart, well, not the world, but the market's falling apart, there's nothing better than short-term treasuries. And that's repeated itself over and over and over again. 3-month treasuries. If you're scared, go buy a 3-month treasury. You're going to get a great yield right now, right?
Right.
Versus buying gold, which pays you nothing. And you got to hope that the price maintains.
Well, and then you have
itself.
to custody it. So you have to pay, whether you're custodying your house or you're paying someone else to custody it. Like,
correct.
There's potential cost there. So.
But then they say Bitcoin's a new gold. So if Bitcoin's a new gold, you have to accept that extreme price volatility. Because I don't, if I was looking at a portfolio and had precious metals, I'm not replacing my precious metals with gold. I'm replacing my equities with I'm sorry, I'm not replacing my precious metals with Bitcoin. I'm replacing maybe my equity.
Right. Or bonds or something. Yeah.
I don't even know about bonds. I'd say I would go to my equity and take it out of there at 1%.
So just to give you listeners an idea of volatility this month. So the day before the launch of the ETF, Bitcoin was at 46,000. It ran up on the day of launch. It ran up to 49 and change. And then since then, we've been down to 39,000. We're back up to 43 and change. So,
but a year ago,
right? Well, but I'm saying that's all within 3-ish weeks.
3-ish weeks, yeah.
That's some serious volatility.
Which is why you don't have 20-30% of your money inside Bitcoin. You keep it below 5-2%.
That's gambling,
right? Yeah, it is. And we're only talking about Bitcoin. If you go outside Bitcoin, there's even more volatility than
absolutely.
that.
Yeah. So Greyscale.
Grayscale. So the Greyscale is one of the funds trust that was able to convert to an ETF.
Correct. They're the one that 1.5% fees too. Just to be clear, like there's a huge delta between them and everyone else.
Wasn't the trust over 2%?
The trust was at 2.5.
Yeah.
They lowered it to 1.5.
So they're just trying to trying to make up for the.
Well, to me, in some ways they kept their word, because before they announced what the fee would be, they were like, "We will be lowering it when it becomes an ETF." Okay, they went from 2 to 1.5. Thanks.
Right.
It was almost assuredly not going to go down to something that was competitive with everybody else, because they would just cut their business off at the knees. I want to say that they had like fee revenue of something like $400 to $500 million a year.
Wow.
On that 2% or whatever the number was. That is obviously going to come down because their fees come down, and they're also having outflows. And I would imagine where they came up with the 1.5% may just be a pure math game of, okay, what does it cost the average investor to get out of this? Because they're going to pay capital gains of 20, maybe higher percent.
Yeah.
And versus them just paying the 2%. And
because the trust has been around for a very long time.
Years. Yeah. I think since 2017, maybe.
Right.
So,
but it also had a very famous investor, right?
Yes. Yeah. FTX. Well, it's had many famous investors, but maybe this one is a little bit different. So FTX, the estate of FTX, is or was a big holder of Greyscale, GBDC, and they, over the course of, since the launch, they've been selling. It seems like they're selling maybe over them and maybe other people as well, because it's kind of the outflows on that ETF has come way down and approaching zero. We'll see where it kind of goes in the next couple of weeks or months, but it's we were talking before we started recording that had this is a bit of an aside here, but it's had SBF been able to hold on for just over a year from when it fell apart before, he would have been made whole. And his fraud would have not been found. So I'm kind of glad it did. It kind of needed to be cleaned up, but it was just kind
Right.
of a bit ironic.
You think there's any conspiracy there that some actors or
Well-
actor was flushing people out and they were able to manipulate the markets enough?
So it is
Because the whole market was down too.
this
though.
whole idea that everything is kind of everybody's on a string and being manipulated thing. I might buy into a little bit. So if you remember, it was CZ of Binance that basically outed Sam, and then
he got in trouble.
Then he got outed by the DOJ
Right.
for money laundering, and he's still in Seattle. He's not allowed to leave. He wanted to go to Dubai for a family surgery,
Yeah.
and they won't allow him to leave. He was willing to post like $4 billion of stock as collateral, and they're like, stay put.
Interesting.
Because he has no ties to the U.S. Like what?
Right.
And he's probably overvalued the stock and all sorts of stuff. But anyways, so
$4 billion for your freedom is probably what he was thinking.
right, and for him, he's worth more than that. So
Right.
it's an easy cost.
He might need to steal from play sheet out of the executive for shoot, who was the executive that got put in a box in
the Nissan CEO.
I thought it was the Nissan
out of Japan.
yeah. So we just need to put him in a box in back of a G5 and off he goes.
Yeah, he needs to.
We might attempt it for $4 billion.
Yeah. Well, it's $4 billion in Binance.us stock.
Oh, never mind. That's worth $1.
Zero. Yeah. It's probably got liabilities attached to it as well. So, anyways, so yeah, the Greyscale has been selling, and it looks like their selling is largely over, and the market seems to be heading. The correlation of the price of Bitcoin appreciating over the last 3 or 4 days with that coming down, there's less sell pressure. So we'll see.
That's interesting. It's the bad actors had to get cleared out, and basically he got in trouble for what money sent to Ukraine and Iran,
not having AML policies and all sorts of other stuff. So like he if he had done the easy stuff, that being easy, and I know it's not easy, but like Binance would be as big as it was. It certainly definitely was attracting a lot of flow, but he could have also not had this headache.
Well, all of them could have taken the Coinbase route, right?
Yeah. So I actually read a thing recently that made the argument that we needed people like SBF and CZ in the industry to get it bootstrapped.
Yeah.
It's an interesting theory. I haven't given it tons of thought, but I guess a bit of a mercenary there willing to kind of come in and
well, maybe it's a modern day, you think some of the great titans of industry, right?
Right.
In the 1920s, 30s, 40s, they would never be able to do what they did back then today.
Oh, correct. Yeah.
So it probably some of that.
Yeah.
You could argue that there are some illegal things going on with Rockefeller and
sure. A lot.
all those people, right?
Absolutely.
So maybe that's how capitalism works. We have to have some of the dirty people go first to make it better for the rest of us. Maybe, I don't know. I say that tongue in cheek, but
yeah.
All right. So let's talk about Bitwise. So this is another, we've been talking with them earlier. They have published their own Bitcoin address.
Yep.
Why would you do this? Why would you publish your Bitcoin address?
So it just adds transparency to the whole thing. Like, yes, we do hold the Bitcoin, because there's always the critics or skeptics in the crypto industry. They're like, oh, you say you have something, but you don't really have it. And because all these frauds, like we were just talking about, right? So as a way to kind of, I wouldn't say that there was any rumor that they weren't holding it. Be very clear.
Right.
I would imagine these are the most regulated crypto holdings on the planet at this point. But they published their Bitcoin address. That was on the 24th. And one day later, some little jokester decided they were going to send that address some Bitcoin. So this is probably the only ETF on the planet that has more assets than it needs to have.
Right. Because some jokester decided that he would just
because there's nothing, you can't block it. So it's like, I mean, it was like, I don't know if it was $1. I mean, it wasn't much Bitcoin, but like,
right.
It was, it made the news. We'll just say that. So
that's fine.
A bit entertaining.
Let's talk about Larry Fink for a minute.
Yeah. So while he was in Davos as well, he was interviewed, and he was talking about, a lot of positives, saying, oh, the ETFs are going well. And he didn't spend much time talking about Bitcoin specifically, but what he's kind of pivoted to, and this is, we talked about this in the last podcast, where I thought one of the themes of the next bull run would be asset tokenization. That's where he spent his time talking.
And describe asset tokenization to people
So-
who are just learning about this.
Yep. So he specifically was talking about real world asset tokenization of securities. So I mean, that's obviously the business he's in. So he's got some motivation there. If you all of a sudden put an asset on a blockchain, it may make it more efficient for the back office to run. So the fees could be lower, for instance. I mean, there's a lot of different reasons
So
why.
buying a stock fund via
Right.
tokenization versus the traditional way,
Correct.
or a bond fund.
A bond fund, or, if you're in a private equity deal, it could be tokenized on a blockchain and it all of a sudden becomes more liquid. Illiquid markets, I think, become liquid, and markets that didn't exist can actually start to exist in an efficient manner with a blockchain, assuming there's enough people interested. It's just,
You could do that with paintings. You could do that with.
they do. I mean, there's already paintings that are tokenized. There's literally somewhat decently famous paintings that they're tokenizing. So it kind of brings down the cost of being part of it, because not many people can go buy a $10 million painting. But if you own $100 of it and kind of participate in the potential upside.
Right.
Yeah. But, in the SEC size, is that a security? That's the problem with these things.
Oh.
I think you were seeing more of that tokenization stuff happen. In the NFTs were going around.
Right.
That was kind of like an adult NFT of sorts. Like, let me buy part of a painting.
Right.
So I don't know. It's the SEC is in these lawsuits, and
It's probably a commodity, right?
it's either a commodity, some of them, or it needs to have its own definition of what a digital asset is.
Yeah.
So you have digital asset, commodity, and security.
So yeah,
Utility token,
Maybe it just
something.
depends on what the underlying.
What it's supposed to
is.
do, right?
Because I could see that with land. I mean, that'd be a great easy way to do that.
Yeah. I mean, there's
Not that it's hard now, but it could be if you had many investors. You
Well-
think about LLCs and
right, because it takes the cost out of owning something. Not the cost. It reduces the cost of owning something. Like, if you're buying a house, you might need title insurance, all these other things. Well, if it's provable on a blockchain that it's owned by this, that 1% that you're paying, you don't have to pay. Like, for instance, buying
Right.
a house. So there's a lot there. But I was just happy to see Larry talking about it, because it felt like that's what the narrative might be. And then all of a sudden, I'm a big believer, if Larry's talking about something, it's going to happen. And because BlackRock just has so much sway in the market. So we'll see. It's not going to be a 1-year thing. This is a multi-year, decade-long journey.
I'm just glad Larry's talking about that and he's not talking about ESG anymore.
Well, he's well. I think around that, I don't know, the week that he was in Davos, they were even saying how they laid off like hundreds of people out of their ESG department.
Yeah.
And I was like, oh, they just meant making room for the crypto people.
Right.
Time to
Right.
pivot.
I mean, I'll give him credit. I don't think he believes a thing he says about ESG like in his heart. I think my outside opinion, I never met the guy.
He likes his
but
bank account more.
yeah. And so from a business standpoint, as a BlackRock shareholder, he's doing great, because he's charging 5x for ESG, and it looks just like the stuff that's not in ESG. There's really not that much difference, right?
Mhm.
So yeah, good for him from that standpoint. And the wiser clients have not participated in having to pay in any more fees, because we saw that hoodwink coming from a mile away.
Bravo.
Hey, let's rewrap this and call it ESG, and let's charge 5 times as much. Kind of like those. What was it, a long time ago? They called them credit default swaps, right?
Oh, yes.
Not as toxic as those, but yeah, not real positive. Well, thanks, Robert. Good
Great
conversation as usual. We've got a couple of podcast episodes you might be interested in if you want to learn more about crypto. Episode 197, will financial advisors be using the Bitcoin ETF soon? They are here. Don Friedman was on that episode. Bitcoin having an upcoming bull run, episode 202. And then also we will link our latest how to choose a Bitcoin ETF to this as well. Don't forget to look at A Wiser Retirement on our YouTube channel, and you can subscribe, follow us there. Thanks for listening to today's episode. If you're interested in learning more about Wiser Wealth Management, you can schedule a consultation with one of our fiduciary financial advisors, or if you want to reach out to Robert at Teton Crypto Capital, you can do so at
Robert at TetonCryptoCapital.com.
That makes it easy. We'll see you guys next week. Thanks for listening.
Take care.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out.
This episode was produced by Edward Resendez.